gentlemen, good day and welcome to the Q2 and H1 FY2024 earnings conference call of HLE Glasscoat Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ronak Jain from Orient Capital. Thank you, and over to you, sir.
Good afternoon, everyone. Welcome to the Q2 and H1 FY24 earnings call of HLE Glasscoat Limited. Today on this call, we have Mr. Himanshu Patel, Managing Director, along with the senior management team of the company. Before we begin the call, I would like to give a short disclaimer. This call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations as of today. Actual results may differ materially. These statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page number 2 of the company's investor presentation, which has been uploaded on the stock exchange as well as the company's website. With this, I hand over the call to Mr. Himanshu Patel for his opening remarks. Over to you, sir.
Thank you, Ronak. Good afternoon and warm welcome to all the participants. Thank you for joining us today to discuss HLE Glasscoat's performance for Q2 and H1 of financial year 2024. Today on the call, we have Mr. Alap Patel, Executive Director, Mr. Harsh Patel, Executive Director, Mr. Naveen Kandapal, CFO, and Mr. Nilesh Ganjwala, Senior Advisor to the company, as well as Orient Capital, our investor relations partner. I hope everyone has had an opportunity to go through our financial results and the investor presentation, which has been uploaded on the stock exchange as well as on the company's website. We would like to provide you with an update on the developments during this period. At the outset, we are excited to announce the completion of the acquisition of 35.56% ownership share in Kinam Engineering Industries, a renowned manufacturer specializing of heat exchangers. This acquisition aligns perfectly with our strategy to expand our product portfolio and incorporate new technology. Kinam boasts of a strong reputation as a leader in designing and manufacturing various types of heat exchangers, including shell and tube heat exchangers, corrugated tube heat exchangers, spiral heat exchangers, box-type heat exchangers, pressure vessels, and process equipment. The client base includes prominent players in the chemical, petrochemical, fertilizer, refinery, power plant, pharmaceutical, biotech, cosmetics, and textile sectors. As informed earlier, HLE Glasscoat will eventually have a 70% controlling interest in Kinam. We believe this strategic acquisition will further solidify our position as an industry leader, dedicated to producing innovative and specialized process equipment, bespoke solutions, and cutting-edge systems for the chemical processing industry. A significant recent milestone includes the introduction of Thaletech products in India. Through Thaletech India, this initiative involves the integration of advanced innovative technologies from Thaletech, Germany, into HLE Glasscoat's operations, with the goal of expanding our product portfolio, reinforcing our local market presence, and providing our customers with superior and first-of-its-kind offerings under the global Thaletech brand. Thaletech India has already commenced booking orders for the innovative product range in India, with deliveries scheduled in the coming quarters. This expansion is set to bring enhanced value to our customers and strengthen our position in the glass-lined equipment market. The company's order book continues continues to remain strong, we expect that the robust order book will lead to increased execution in the coming quarters and will result in improved margins. The current order book provides around 5 months visibility for our India business and a visibility of 9 to 10 months for the Thaletech Germany business. The business in USA is also encouraging and has a strong order pipeline. This reaffirms our commitment to excellence and our ability to meet the evolving needs of our customers. I will now request Mr. Naveen Concall, our CFO, to take you through the financial performance for the quarter and the half-year performance. Thank you. Over to Naveen.
Thank you, sir. Good afternoon to all the participants. The company has reported consolidated revenue of rupees 224 crores for the quarter ending 30th September 2022 and EBITDA profit of rupees 30 crores for the full period. Our filtration, drying and other equipment segment contributed around rupees 100 crores compared to rupees 82 crores in Q2 FY23, representing a substantial growth of 22.2%. Meanwhile, our glass-lined equipment business generated approximately rupees 122 crores compared to around rupees 130 crores, indicating a decline of roughly 7% year-on-year. Our EBITDA reached around rupees 30 crores, reflecting a sequential increase of 25.1%. The EBITDA margin stood at 13.3% compared to 12.1% sequentially. In terms of profit, our PAT amounted to approximately rupees 11 crores in Q2 FY24, marking a growth of approximately 17% sequentially. The PAT margin is at 4.8%. These financial results demonstrate our resilience and ability to navigate challenging market conditions. Now, I would request the moderator to kindly open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and 1 to ask a question. Our first question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah. Hello. My question is for the glass line division in the domestic market. Could you throw some light, like what is happening in this division since past couple of quarters? We are seeing a continuous pressure on the margins and also some outlook. I understand the industry is there is some deferment of orders from the customer due to the business scenario. But on the margins front, like we had first the problem with the steel prices, inventory losses, and like what happened actually in this quarter also. I think the raw material pressure is eased out, but still the margins are lower. So your thoughts, what has happened in the last 6-8 months in the domestic glass line industry will be very helpful, and some outlook going forward. Yeah, that's my questions.
Thank you for your question. I think you are right to say that, yes, the domestic glass line business has had a bit of an adverse working. And you are also right to point out that there has been certain deferment of orders from certain customers. So this deferment has adversely impacted the dispatches during this period, which is reflected in the top line. We do believe that this will pick up during the balance quarter of the year, as has been the trend historically. If you see our trend over the last several years, the second half of the year is substantially better compared to the first half. And we believe that we should be in a position to catch speed during the second half of the year. As far as the margins are concerned, I think the connected with the deferment of orders is also a certain pressure on the margins. This is linked to two things. One is, of course, negotiation of prices, and more importantly, it is related to the scale of operations when the overheads are, of course, for the entire period. So it's basically the fixed costs which have pulled down margins at the domestic level. So these are really the two main reasons why the domestic glass-lined business results look slightly adverse.
So what is the utilization level for our domestic glass-lined business? And if you could say, like, what was it in the previous quarter and also the previous quarter last year? Since there's a deferment of order, so we will be working at a lesser utilization, so more fixed cost to absorb. So, if you can give that data.
So the glass-lined operations at domestic level last year for the same quarter were in the range of about 85%. In the last quarter, it was in the range of between 70 to 75%.
70 to 75%. Okay. So where do you think the margins will stabilize for us? Because we have seen 20%, upwards of 20% margin in this business. So you think we can go back to that number, or how it would be?
So I believe even at the time when we had reported 20+% margins, we were quite clear that these are not long-term sustainable. We do believe that the long-term sustainable margins in this business are between 16 to 18%. And that we still believe would be the long-term average.
This is domestic glass-lined, right?
So yeah, we're talking about domestic glass-lined. That's correct.
At the company level, what sort of margins can we work with?
So again, we believe the same margins can be expected from the filtration and drying business. The margins for the Thalitech Germany business is expected to be in the 14 to 15% range. And when I say margins, we are talking of EBITDA margins.
EBITDA, yes.
So those are the kind of margins that we expect to be our long-term average.
Okay. And the new acquisition, Kinam, for how many days was it consolidated?
Sorry to interrupt. Mr. Shah, may we request you to return to the question queue for follow-up?
Okay, sure.
Thank you, sir. Next question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
Yeah, hi, sir. Just continuing on the previous question. So, even for the F&D business, where you have seen Q-on-Q jump in revenues, margins though have contracted there as well. So, if you can explain what's happening there, so in terms of market position, is there a significant deterioration also versus, let's say, both in GLE and ANFD? Whether you're getting squeezed from GMM and unorganized players in between, or what is play out in the market position for you, which is hurting the margins in a big way?
Okay, so I think on the F&D side, we do not have any substantial competition from the company that you mentioned, because I don't think there are very serious players in that market. To compare margins, again, there is a slight lack of comparability between the two periods, simply because in the previous half year and full quarter, we had the commissioning of Silvassa unit, which was a greenfield project which was commissioned in May 2022. So the period, the first quarter and the second quarter of last year did not have the full scale up of the Silvassa business, which is reflected in the cost for this particular period. So there is a slight margin adjustment only on that account. In terms of margins, we are currently in the 13.5% range, which for the year we still believe will go up simply because the second half always has been substantially better than the first half.
Okay, and Q-on-Q, how do you explain the margin fall in the ANFD business, 15.2 falling to 13.5 or 13.9? despite revenue being much higher Q on Q?
I think this is predominantly a one-time hit on account of incentives and increments being paid out to the employees. So that is a full year effect that has come into this.
Okay.
So if you see the predominant increase in that particular part is only on account of labor cost and employees.
Okay. Okay. And if you can explain
to add to what Nidesh Bhai has already said, there is also an element of the revision in minimum wages that has happened in Gujarat. That is also reflected in the last.
Okay. So the current level of employee cost should sustain, or there will be large one-time impact on this?
I think the current level of employee cost should sustain. I think the Q2 has a one-time cost, which is the adjustment for which covers the entire 12-month period.
Okay. And in GLE, are you seeing significantly higher competitive pressure as well, apart from deferment and everything, which people understand, but is there a competitive pressure as well from GMM and other guys?
So again, as I said, in the filtration and drying space, we do not see competition from GMM. It is
right.
Predominantly, we still continue to hold the predominant market share. So the order book, etc., even on the filtration drying side, is robust and continues to look good going forward. On the glass line business, of course, yes, we do have competition from GMM, and I think the competition is quite intense in the market, yes. Just to supplement that, we do not have any new competitors of any serious nature in either of these product lines.
Okay. Okay. And the sustainable range of margins which you mentioned, 16 to 18%, that ideally should be what? In a more normalized market, let's say if FY25 is that, if you see a revival, that's the level of margins which you foresee, is what you meant there, right?
Yes. Yes, that would be a very fair assessment, yes.
Okay. Okay. Yeah. Fine. That's all from my side.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Miraj from Arihant Cap. Please go ahead.
Yeah, thank you for taking my question. Sir, I wanted to understand that when I was looking at the order book, it seemed somewhat muted, and I just wanted to understand what kind of commentary are we receiving from our customers. Is it that the orders are being delayed, or are there cancellations, or are they just postponing their expenditures? That's my first question.
Thank you. I think the industry has to be, we cannot really classify it as one market. So I would respond with, in terms of different market segments that we have. So agrochemical industry is, I would say, largely muted. Or rather, they are deferring orders and staying quiet right now. The dyes, pigments, and those colorants business have just about started picking up. So they are nowhere close to the levels that they were about a year ago. But they have completely stopped, making any investments. So some companies have now just started coming back. The specialty chemicals right now looks like they are at normal levels. They are in fact doing good, and we are experiencing reasonable order flows from them. And we expect the pharmaceutical industry, which was kind of relatively speaking slow over the last 2 years, is now picking up, and we expect order book to increase from the pharma sector. So that's how we are seeing the market right now.
So which was the second sector you said after agrochem?
Colorants. So when I say colorants, it means dyes, pigments, food colors, everything that has to do with chemicals which finally eventually go into making colors, some kind of color.
I understand. And sir, the next question is regarding certain companies in the international market, in some German specialty companies. They're expecting high energy costs, and the demand is weak over there. That is what I got from the commentary. So, has there been any delays in decision-making process in European region? If you could just highlight, give some color on that.
Yeah,
So the overall market situation in Germany is quite healthy. We continue to see not only a strong order book, but also quite a strong pipeline of inquiry. And again, even in Germany, the scenario is slightly different within the different subcategories of the market. So some segments are doing better than the others. So again, even in Germany, we are seeing that both the order book and the inquiries from the pharma sector, as an example, is much better than the agrochemical or specialty chemical. But on an overall level, it's quite healthy at the moment.
Understood. Got it. And so just before I get back in the queue, if you could just tell me the composition of our raw material inputs, what we have.
So our main material of construction is, of course, metal. So we have stainless steel, we have carbon steel, and we have the exotic metals such as hexalloy and so on. These would, between them, constitute close to about 60% to 70% of our raw material cost.
Got it. Perfect. I'll get back in the queue. Thank you.
Thank you. Next question is from the line of Simar from Negin Capital Services. Please go ahead.
Yeah, hi. Thank you and good afternoon to everyone. So could you please provide me insights into the current high level of inventory in our working capital and clarify whether such inventory build-up is a deliberate strategy? Additionally, if you could share the target inventory days that we are aiming for operations.
So the inventory should be looked at in two perspectives. One is, of course, as I said, we only manufacture based on orders. So when the order book is good, the inventory always goes up. So one is it's a reflection of the order book that we have. Also, as we said, the second half of the year is always good from a dispatch perspective, and obviously the manufacturing cycle has to accommodate the production required for dispatches in those 2 quarters. So that's one of the reasons why inventory is high. The second, let's say immediate reason is because in this financial period we have consolidated the entire balance sheet of Kinam Engineering Industries. So the revenue for Kinam has been consolidated only from 26th September, which is only for a period of about 4 or 5 days. Whereas, of course, the position of inventory is as at 30th September, which is the entire inventory as of that day. And hence, the number of days is not actually an accurate reflection of the revenue or the operations.
All right. So destocking will happen. Okay. Got it. So on the other aspect, I wanted to ask you the previous acquisition of Thaltech, its introduction in the Indian market. What has been the initial response and what are your plans for scaling up?
Yeah. So it has been about 2 to 3 months that we have actually introduced the Thaltech products in the Indian market. The initial response is quite encouraging. We have also not only just launched the product, but we have also now started booking, confirmed orders from customers. And as expected, the Thaltech product is a value-added and a high-value proposition product, and I think it is being received as such. So things are going, as far as the Thaltech India project is concerned, they are going quite well, and as per our plan.
Got it. So with the introduction of Thaltech's revenue, you are planning to achieve better EBITDA margins as well. In the previous plan list, you mentioned like 16 to 18% as a sustainable margins going forward.
Yes, that's correct.
All right, sir. Thanks. That's it for all, and wish you a happy Diwali and your management.
Thank you so much. You too.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Next question is from the line of Azeb Parbatini from Okara Capital Private Limited. Please go ahead.
Yeah. Hi, just one question from my end. So previously you had guided a revenue of around 1100 or 1150 crores. So I just wanted to know what are the strategical plans that you try to, considering the December quarter is generally subdued and there's a slowdown in chemical sector? Plus, what will the strategies would you adopt for like maintaining the margins of 16% as you like mentioned initially?
So our historical experience has not been that the third quarter is subdued. We believe that the third quarter is a normal quarter and the last quarter obviously is a much better quarter. So our experience has been that the second half normally contributes between 55 and 60% of the revenues if you look at our historical performance. So if you look at it from that perspective and also incorporate the revenue that will be added on account of the accounting for Kinam, I think we are on target.
All right. And what about the margins?
So on the margins, as I said, normally when the revenues go up, fixed costs remaining the same, the impact on margins is pretty much automatic. So that happens again. Yes, it's a direct operating leverage. Yeah. So.
All right. Okay. So just one more question. You had mentioned the raw materials mix like in the last few questions. So can you please repeat that again? I just missed it.
Yeah. So our three, obviously our material of construction is metal, and the three types of metals that we predominantly use in our manufacture is stainless steel. Then we have carbon steel, which goes into the glass line products, and we also have exotic metals, which goes into our specialized equipment.
All right. Okay. Thank you so much. That's it from my side.
Thank you. Our next question is from the line of Praveen Grumle from Ananya Research. Please go ahead.
Yeah, thanks for the opportunity. I have one quick question. The industry-wise revenue breakup that you shared of 39% on API pharma and specialty chemical of 42%. In the next 1 to 2 years, do you continue to see the same breakup continue, or do you think there is some change? Thanks.
I think as Mr. Harsh Patel mentioned earlier, there is always a little bit of a realignment of orders from different segments across quarters. We do believe that the share of pharma, the API pharma industry will increase as we go forward. Maybe about 3 years or 4 years back, the API pharma contributed up to 55 to 60% of our sales and order book. Currently, it is closer to 40. So this is a evolving situation that changes pretty much on quarter basis. But looking at the current, the API pharma as a percentage of the
So we are unable to hear you. Ladies and gentlemen, please stay connected while we reconnect the management.
Am I audible?
Yes, sir. Please go ahead, sir.
Okay. So maybe I can start to answer the question all over again. I think I was referring to Mr. Harsh Patel's response that the composition of the various industry segments in our order book is an evolving scenario and changes quarter on quarter. Maybe about 3 or 4 years back, the API pharma used to contribute between 55 and 60% of our sales and order book. Currently, it is closer to 40. Looking at the current trends, we do believe that the API pharma will increase its share in the overall pie.
Okay, that's it from my end. Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah, thanks for the opportunity again. My question is that what is the price premium between Thalitech reactors and HL reactors when in the Indian market?
Sorry to interrupt, sir. May I request you to use your handset, please?
Yeah, is it fine now? Hello?
Yes, sir. Please go ahead.
Yeah, I would like to understand how do we position our Calitec reactors versus the HLE Glasscoat reactors. What will be the price premium we'll be charging? And secondly, on the capex front, how much capex will we be doing for this year and the next year?
Yeah. So I think to answer the first question, so the Calitec reactor, so compared to the products that are currently
Sorry to interrupt, sir. We are unable to hear you, sir.
Am I audible now?
Yes, sir.
The current offering in the market where the product is standardized, the Calitec product is a very customized offering. So it's a highly value-added product. So unfortunately, there can't be a direct comparison of prices between the two products because they offer very different value. But in any case, if I were still to put a number, it could range anywhere between 10% to as high as.
Alaba, your voice is breaking a lot.
Ladies and gentlemen, please stay connected while we reconnect the management, please. One moment. Ladies and gentlemen, we have the management line reconnected. You can go ahead, sir.
Hi, apologies. There seems to be some network issue. So I was saying for the Calitec reactor versus an HLE reactor, there can't really be a direct comparison. The current offerings in the glass-lined equipment market in India are more standardized in nature, whereas the Calitec product offering is a highly customized solution and a value-added product. However, if you are still, to put a number on it, it could range anywhere from a 10% to 40% size.
10% to 40%. So now, with our Calitec portfolio, we are across the product range in the reactors. We are into SF also now, plus reactors from HLE and now the Calitec. So this completes the entire offering of reactors for us. I mean, compared to any other company making reactors globally, does it complete the entire offering to the customer?
So I think we always had the full range of offering from a perspective of customer requirements. Calitec actually adds a new innovative range which nobody else offers currently. So we actually have an offering which is over and above what others in the market.
Okay. Yeah, and my other question was on the capex. If you could share the figure for this year, next year, what is the expectation on the capex front?
Yeah, so on capex front, there are no new projects planned. There will be a normal capex which is going on. Other than that, nothing is planned as of now.
Okay, so this year we spent 230 crore on purchase of plant, and 80 crore is towards the acquisition. So this 230 crore will be incremental how much further in the next 6 months?
Sorry, the 230 crores is the value of 100% of the acquired company.
Okay, I'm just looking from the cash flow statement.
Can you hear me?
Yes.
Yeah, so the 225 crores is the value of 100% of the acquired company, and that is what is reflected in the overall numbers. And the minority interest or the interest of the non-HLE shareholders is reflected in the minority interest on the other side.
Okay, so I'm looking at the data from the cash flow.
The total cost of the acquisition has so far been 80 crores for 35.56%.
80 crores. Okay. So now 230 crores is shown as purchase of property, plant and equipment. So how much more will we be spending in the H2?
So there is no further expenditure on the actual purchase of plant and machinery. However, we will be investing another 77.5 crores to acquire the balance 34.44% to take our stake up to 70% in Kinam. The 77.5% stake, 77.5 crores is going to be by way of an issue of shares to the erstwhile promoters of Kinam.
Okay.
So there is no cash outflow on that account.
Okay, and how will you what will the price at which they will be issued?
So there is a valuation that is being carried out for that purpose, and that is something that will be approved by both the parties in accordance with the agreed terms, and that will also get reflected in the scheme of arrangement which we propose to take to NCLT.
Okay. So now cash outflow towards Kinam is now all to, so it will be all by share. So no actual cash.
That is absolutely correct. That's correct. That is correct.
Okay. And the capex now, so for FY25 next year, what is the capex planned?
So as Mr. Concall said, we do not have any major capex projects on hand currently. There will only be the normal maintenance capex, which is in the range of 8 to 10 crores every year.
Got it. So significant cash flow can be used for debt repayment then next year.
That's correct.
Okay, Melissa. Thank you.
Thank you. Our next question is from the line of Shyam Maheshwari from AB Capital. Please go ahead.
Yes, sir. I just had a couple of questions mainly on understanding the product. So when we say Thaletech is a more premium product, what are some of these characteristics that defines it to be a more premium product? I mean, I just wanted to understand some of the properties which you feel that this product can be on edge.
Yeah. So if you typically look at what is expected out of a reactor in a chemical plant, the expectation is that the reaction that is intended to be carried out should happen in the most efficient manner. And when you look at a typical glass line equipment, there are a few challenges which are universal to this kind of a product. So heat transfer, for example, is one challenge. So a typical glass line reactor offers poorer heat transfer compared to an equivalent metal reactor. Mixing is usually a challenge because you can't have very complex agitators made in glass line construction. So mixing is usually poor, and all of these factors lead to poorer performance in a glass line reactor compared to, let's say, an exotic metal reactor. So while this has been a norm that has been accepted in the industry, the solutions provided by Thaletech really challenge this norm and provide superior heat transfer or mixing performance compared to any other glass line reactor in the market. So effectively what it means is that you see a reduction in batch time, you see a reduction in the cost of utilities, etc., etc. So when I say that it's a value-added product, it directly leads to a lowering of operational cost for our customers.
Understood, sir. Very helpful. My second question is kind of a continuation to this. So in a way, when we are offering these products to our customers, do we pitch, a Thaletech product over our own, GLE product? In a way, are we cannibalizing sales here, or is this kind of opening up new opportunities for us?
So I think most of the features in the Thaletech product are actually unrivaled. So not only does HLE not have those solutions, but these solutions are simply, in most cases, not available to an Indian customer. So it really doesn't cannibalize on the HLE market. It simply opens up newer opportunities.
And these reactors were earlier imported. Is that so?
No, these will be manufactured in India.
Okay. Got it. Okay, thank you.
Thank you. Next question is from the line of Miraj from Arihant Capital. Please go ahead.
Hi, thank you for taking my question again. Sir, we recently got a strategic investor by reducing some promoter stake. So, just wanted to understand if there are any more plans to reduce further stake, or this is it? Are we going to maintain it here?
I don't think the intent was ever to reduce the stake. I think the promoters continue to hold a very healthy stake in the company and will continue to do so. The only intention was to bring in a high-quality investor in the shareholder list, and I think that is really what we've achieved by doing that transaction. So that was really the only, goal or ambition of doing the transaction.
Understood. And that's it from my side for now, sir. I'll just get back in the queue.
Thank you. Ladies and gentlemen, that was the last question of our question and answer session. I would now like to hand the conference over to Mr. Alap Patel for closing comments. Over to you, sir.
Hi, thank you for all the participants for taking part in this earnings call. I would also like to thank the members from the company for your time. Thank you so much, everyone.
Thank you. On behalf of HLE Glasscoat Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.